Good morning, everyone. You are watching a live daily market outlook from Windsor Brokers for Tuesday, 14th of May 2013. Rather uneventful day seen yesterday with the slight continuation today, as most of major pairs and commodities spent yesterday's trading in the, I would say, consolidative mode following last week's strong movements. Initially, Euro's consolidation was capped by 130 psychological barrier with brief break higher seen overnight during the overnight session today, so far being short lived as the prevailing negative tone still keeps the downside focused. Similar with the sterling that yesterday extended the weakness and broke below psychological 153 support down to 152.76 with the bounce higher above 133, so far being limited at 153.30 and well below important levels, break of which is required to signal some more significant corrective action. Now dollar yen shows initial signals of indecision and the possible corrective action. Yesterday's doji that appeared on the closing shows that the pair currently does not have clear direction as 102 barrier caps the upside, and the slide below 101.50 as initial support sees potential risk of stronger pullback. Dollar Swiss is off its recent highs and dips lower towards 95 around figure support, though overall picture is still quite positive and still sees more potential towards the upside. A brief look at the Aussie dollar that remains under pressure. Sideways movements correcting, consolidating basically yesterday's fall to fresh low at 99.39 is seen likely preceding fresh weakness. Now from commodities, crude oil is consolidating, I would say again within the 94.50 and the 95.70 range, but the picture is slightly aligned towards the downside following a double upside rejection at the 97.12 and 96.74, though the downside remains supported at approximately 93.40, and as long as we hold above this level there will be more potential towards the upside. Gold is in the sideways mode from since yesterday's beginning of the day, slightly aligned towards the upside following overnight's jump to 14.45, still below important levels 14.50 and 14.62 in order to confirm recovery, and still keeping the risk at the downside supports at 14.25 and 14.20 recent lows. From today's calendar, main focus comes on German ZU data, the economic sentiment that is due at 9 o'clock GMT. Forecast is 39.5. I think you don't see the screen, so give me just a second. We are facing small technical problem. Okay, now you can see the calendar. Okay, the ZU economic sentiment for May from Germany is due at 9 o'clock GMT. An improvement is seen on the forecast of 39.5 compared to 36.3 release of April. Eurozone ZU economic sentiment is due at the same time, 27.3 versus 24.9. While the European industrial production for March is expected to tick higher, 0.6% is the forecast compared to February's 0.4%. These are the top releases for today. Just going back to the overnight, the early morning releases, wholesale price index from Germany came at the same level of the previous release in March, -0.2 versus more pessimistic forecast at -0.3%, while monthly inflation for April stayed steady at -0.5%. That was the previous month level and forecast. Further during the day, no significant releases except the import prices from United States due at 12:30 GMT. No changes expected according to the forecast, -0.5% versus the same level seen in the release of month of March. Since we are a bit late this morning, I will not waste more time, and we're going to move to the technical part to see what we can expect for today. As always, starting with the euro. Just to wait to see the screen. Okay. Basically, the consolidative action is underway following a dip to 129.34, also 61.8% Fibonacci retracement level. That was confirmed yesterday on a fresh attack lower to 129.39 and the subsequent bounce higher. This now offers good support in the near term. Though the brief break above 130 psychological level that extended to 130.25 so far was capped by descending 20 days moving average of the 4-hour chart, as 4-hour indicators hold firm negative tone and again see increased downside risk that will be confirmed on a break below initial supports that are approximately at 129.60 and open 129.34 as our key near-term level. On the upside, that seems to be well protected for now. 130.00 is now back as resistance as the price failed to sustain gains. 130.33 is this Fibonacci 38.2% retracement of the downleg from 131.93 to 129.34. A break above last Friday's high at 130.50 and 50% retracement at 130.64 is required at this point to confirm this base at 129.34 and allow for some stronger recovery. As long as we stay below these levels, there will be increased downside risk as break below 129.34. As we said, 61.8% retracement of larger 127.44 to 132.41 rally would risk a slide down towards psychological 129 support and 76.4% Fibonacci support at 128.61. The British pound extended yesterday weakness to a fresh low at 152.76 following a break below psychological 1.53 support. Close to this was also 76.4% Fibonacci retracement level at 152.91. Overall negative tone persists, though quite extended. The conditions on the 4-hour chart see potential for some corrective action, though it's quite unlikely as at this point, as our indicators are also holding the negative tone. Some appearance of bullish divergence on the hourly chart could suggest that possible corrective action may take place above 152.76, though the beginning of European session fresh weakness sees again more potential towards the downside, as the pair is currently attempting through 153. Immediate target is at 152.76. This is yesterday's low, a break of which is expected to open way towards more significant and pivotal 152 support, where we have 152.17 is the 50% retracement of the entire rally from 148.30 to 156.03, as well as second half of April higher platform at 151.95. This was the lowest level seen as the break point for the pair, loss of which to confirm the top at 156 zone and also to signal an end of corrective rally from 148.30, as the pair already broke below the main bull trend line that started from 148.30 and going through 150.32 and 151.95. Yesterday's break and the close below this level sees now increased risk for possible further extension lower. Conversely, any recovery higher requires a break above 153.83, which is the yesterday's high, as well as 154 zone that marks 50% retracement and a previous high and break point, previous support and break point, now acting as strong resistance, a break of which is expected to shift focus higher. So far, more pressure is still seen towards the downside, and the immediate risk is seen on a slide below 153 to open 152.76 and then 152.17, 151.95. With dollar yen, as we mentioned at the beginning, appearance of doji candle yesterday, we can see it on the daily chart here, as shows the near-term indecision as the pair hesitates under 102. Brief breaks above to 102.14, 102. The highest 102.14 seen so far did not succeed in extending a break above 102 barrier and keeping it as initial resistance for now. Now the break below initial support at 101.50 that marked yesterday's consolidation range floor, and the dip to 101.25 so far sees potential for some stronger corrective pullback as our indicators now dipped into the negative territory. From the other side, the 4-hour indicators are extremely extended, and now RSI is coming out of the overbought zone. That could be another signal for some more significant corrective action towards the downside, with the loss of initial support at 101 psychological support. Also the 23.6% retracement of uplift from 97 to 102.14 reinforced by 4-hour 20 days exponential moving average will be seen as a trigger, and would likely open next supports that are Fibonacci supports. We have 100.80, which is 38.2% retracement of uplift from 98.63 to 102.14, and then 100.38, 50% retracement. In any case, any stronger pullback should hold above previous peaks that are first one is the psychological 100 support, and then previous highs that are parked between 99.87 and 99.74. Any break below these levels would be a signal that recent strong rally has ended, and more downside risk will be introduced. Otherwise, holding above 99.70, 100.00 in case of any deeper reversal would keep the overall bulls in play, and would look for a fresh extension higher that may open on a break above 102. Will open next round figure resistance at 103.00. From the Aussie dollar, downside pressure continues and persists as the pair dipped and closed below parity level, with yesterday's fresh low posted at 99.39. A brief bounce higher was so far limited by the parity level that now acts as initial resistance, and is reinforced by descending hourly 55 days moving average that keeps the downside pressured. And now the appearance of again bullish divergence on the hourly chart suggests that some stronger corrective action cannot be ruled out at this point, with the break above 100 and 100.28 seen as initial requirement to signal to confirm that confirm the near-term base at 99.39 and possibly open way for some stronger recovery, where we'll be looking for a test of Fibonacci 38.2 at 100.59, and the more significant is 101 level high of last Friday, as well as 50% Fibonacci retracement of the down leg from 102.53 to 99.39. Holding below 101 will make any stronger move higher seen as corrective and preceding a fresh weakness, as overall picture remains quite negative at this point, and sees more potential towards the downside. We'll be looking for a test of 99 psychological round figure support, and 98.76 Fibonacci 138.2% expansion of the third wave from 103.83. That, according to the wave principles, could travel down towards 98 zone, where is the next Fibonacci expansion level, 161.8% expansion. Next is the crude oil. According to the Ichimoku studies on the daily chart, the price action remains well supported, and the bullish tone persists as the price holds above the cloud and the above the Tenkan Sen line that also broke above the Kijun Sen line. Now, from the other technicals seen here, the daily structure is positive. The price holds above the ascending bull trend line drawn of 85.90 low, though upside is still limited by descending bear trend line currently standing at approximately 96.70, and this is the first requirement for the price to break above this and open our next static resistance at 97.12. This is the high of 6th of May, in order to open next targets, next peaks at 97.68 1st of April high and 98.63 13th of February high that are seen as the main short-term targets. On the 4-hour chart, the indicators are losing traction, basically breaking, attempting to break below their midlines following a unsuccessful renewed attempt at previous high at 97.12. 9th of May attempt stalled at 96.74, and since then the price is in descending mode, spiking as low as 93.37. Now the price action moves between the 55 and 20 days moving average, and these are our first initial limits, upside and downside. While the violation on any of these supports would risk on the downside, would risk test of low at 94.47 and then 93.37, which is the low of 10th of May, ahead of 92.83, 38.2% retracement of the entire rally from 85.90 to 97.12. On the 4-hour chart, this easing is still seen as the corrective and still, I would say, rather even consolidative than corrective, as the structure is still in a way positive despite some attempts below the midlines of the indicators, with confirmation requiring break below 93.37 and 92.83 to confirm the top at 97.12 and allow for deeper reversal. And finally, the yellow metal. Quick look at gold. Basically, the price action is now consolidating in a triangular shape mode, following a dip to 14.19 2 days ago, and subsequent bounce higher, with the recovery being limited at 14.49. This is the Monday's high, and the 14.19 is the Monday's low. Now, narrowing range sees no clear direction at this point, though improved hourly conditions see a slightly more potential towards the upside. That requires a break above the triangle resistance, currently at 14.44, along with the 14.45 overnight's high, and then more significant is 14.49 peak of 10th of May, as well as 50% Fibonacci retracement of the fall from 14.76 to 14.19. Break above these levels is to avert immediate downside risk and open next barriers 14.54 and 14.62 Fibonacci levels, and then we have our strong barrier at 14.76. On the downside, trendline support and triangle support stands at 14.33, and then we have a series of lows 14.28, 25, and our key support at 14.20 low of 10th of May. Set slightly negative tone is seen on the 4-hour chart, as indicators are in the negative territory below their midlines, while slight improvement is seen on the hourly chart, but of course requirement is seen for a break above a minimum 14.50 in order to confirm. Currently it's I would say directionless mode, with the narrowing range forming the triangle, and break of either side is to give us a fresh direction. Overall picture is still negative, as the price failed to break above 14.87 This is also Fibonacci 61.8% of entire 1590 to 1321 move, and the subsequent pullback that lost initial support and the range floor at 1440 now sees increased downside risk. Confirmation requires break below 1420, and more significant is 1404, 50% retracement that will confirm top at 1487 and open way for a stronger pullback, further retracement of recovery rally from 1321 to 1487. And that will be all from my side for today. We were a bit faster than usual as due to some technical problems. We started the session later. If there is any question, you have to be quick to submit them, and I will do my best to answer your questions. Okay, it seems everything clear and nice. No questions for today. In that case, I would like to thank you all for attending our live sessions. A reminder for tomorrow at the same time at 7 o'clock GMT. Until then, wish you a nice Tuesday, and as always, a lot of success and profits in your trading. Okay, we have Dow Jones. We're going to take a quick look as our time is running out, and colleagues from the Arabic webinars will take over. Just a quick look at the Dow Jones that, according to the hourly chart, looks to me quite, daily, pardon, chart looks to me quite well supported, holding off recent peaks at 15,110. I don't know whether you see the chart or not. The system seems to be a bit slow today. Okay, now you can see it. Now back to the lower time frames again. For our structure is positive. The fresh high posted on Monday at on 10th of last Friday at 15,110 is the highest seen so far, with the brief consolidation being now contained at psychological 15,000 level, and seeing again more potential towards the upside, though some corrective action cannot be ruled out, as 4-hour indicators are heading south at this point. Of course, break below 15,000 as our initial support is will be seen as a trigger towards the downside for some more significant pullback. According to the Fibonacci levels, just close to this, approximately 14,940 is the 23.6% retracement of the uplift from 14,393 to 15,110, and this is reinforced by 55 days exponential moving average. And then we have 14,836, that is 38.2% retracement, and that should basically hold the downside. This is close to the previous peak at 14,822, and is seen as ideal reversal point for the pair. And now silver. Hourly structure is neutral. The price holds between 2350 and 2386, quite a narrow range. Let's see the larger time frames. Again, very neutral tone seen after the price dipped to 2200, and the bounce higher stays off stronger resistance at 25 zone, also 50% retracement. I'd say no clear direction at this point. Slightly the 4-hour indicators are slightly aligned, negatively aligned, as the price holds below both 20 and 55 days moving averages, and the indicators are slightly below their midlines. Yet no, as I said, no direction seen for now. Good support is 2318 on the downside, and on the upside we are talking about 2450 zone. to give initial signal, while break above on the upside 25.00 is required to shift the focus higher and direct the price towards the upside levels, while break below 23.30, 23.00 is set to turn focus towards the downside, where we have 22.45, 60 supports and 22.00. As said, neutral tone dominates for our slightly aligned towards the downside, but lacking direction with the range limits seen as triggers for fresh direction. And I think this is all for today. Our time is finishing. I wish you a nice day again, and expect to meet you tomorrow morning. Good luck.